Good morning, traders. It is Friday, October the 4th. Audio may sound a little different today. My other headset died on me this morning, but let's take a look at the charts here. We've got the SP 500 daily chart. Yesterday in pre-market, we talked about how we had a type of market condition on this big down day that showed panic selling, and it usually meant we were going to see some type of follow-through, washout low the next day, and then a sharp rebound. And that's very similar setup that we saw over here, and we saw again over here. I showed these yesterday morning, and you can see what happens the following day. The market opens, flushes out, and then rebounds. But again, short-lived rebound into resistance. This is what took place yesterday. The market opened, flushed out, with everyone panicking with their market orders the following session. So most people would see this when they get home from work. They place all their stop orders to exit all their positions the following day, and they panic out, and of course it creates a big flush down in the morning. Everyone panics out, and then the market rebounds without them on board. And now the question is, how high do we go? We're going to have resistance right across this area, continuing from previously where the market kind of came here and broke below it, and of course all these previous highs. So the market could continue to grind its way up. Overall, we have this 5-day moving average coming down. It's usually a fairly critical short-term resistance area. We'll see if it can break through there and head all the way up to resistance up here. But overall, we are expecting the market to be choppy in some type of range, whether it's a much larger range or a more narrow range. And of course, the way the markets move is usually most of the downside happens, just like we saw over here in August. Big move happens, and then it spends a full month consolidating with really no real price advance. Just great for day traders and momentum players. That's about it. But overall, we want to look at getting into an asset class that'll rise during that time, which are bonds. So as the market chops around here and tries to carve out a bottom or potentially breaks support and starts to fall, we should see money flow into bonds and continue to move higher. So let's move over to bonds, take a look. Now, if we take a look at what the market did, going back in August, so the stock market traded sideways in a big range like this, stuck in a range. We were waiting for some type of breakout. Well, bonds ended up having a beautiful rally and took off. And now we're into a same style or kind of mindset with traders. The stock market right now is sold off. It's probably going to trade in some type of range for a while, and then whichever way it breaks will signal what bonds do. But overall, during this time of sideways, we could very easily see money continue to rotate into bonds, and that's what we're looking for, is a move up to these recent highs and potentially to break out and continue to go higher. Now, if bonds have a nice pop today, they don't need to go up too much further. We're going to hit our first target, which will be closing out half our position to lock in about 2% gain almost, and we'll move our stop to our entry price. In case price does roll over on any type of news, we could be protected for the balance of our place. We don't lose any money. We can lock in the gains, and we'll keep the runner for much larger gains going forward. If we look over at the safe havens, we had some economic news come out this morning. I think we got the Fed talking today at 2, so it's going to be we had a little bit of some movement here this morning at 8:30. But I think a lot of the market will be holding off to see what happens later this afternoon. But again, metals they've bounced up, they're trading at resistance, and we're looking for potentially continued sideways or basing formation. Again, a lot of it's going to unfold of what the Fed does going forward. Let's take a quick look over at silver. It was down 1.5% this morning. It's rebounded a little bit, but overall, big selling in the precious metals this morning. Lots of volume, but it hasn't really moved down too far. But again, there's a negative bias in the market. And if we look at GDX, had a nice push up there with more or less, if you think back to the SP 500, everyone panicked out of the SP 500 yesterday morning. And of course, if that money's going out of the stocks, the risk on, they're going to move into the risk off. So everybody piled into gold miners yesterday morning. And then by the end of the day, it ended up coming back down. And it looks like a topping candle, meaning we could see price continue to move lower or drift sideways. I do feel as though metals are going to try to trade sideways and hold their ground going forward here. Looking over at energies, natural gas, yesterday came down. We were talking about how we're looking for some type of reversal pattern and some life of a bottoming formation. Yesterday, Early morning saw some really nice life in natural gas. It ended up having some follow-through buying right up to the 5-day. Today it's giving back some of those gains, but overall this is the type of sign that it's trying to carve out a bottom. And if we look at this type of price action over here, more or less the market started. It was in a big decline before here. It came all the way down. We had a knee-jerk short covering reaction and some follow-through, and then it reversed back down to hit new lows. But then it started to form this base, and you could argue whatever pattern you want to see here. There's a potential inverse head and shoulders with a, you could argue this is a bull flag, getting ready to break more or less this neckline across here. There's all kinds of ways you can see it as a technical trader. But overall, we're looking for a base. We're looking to catch this run, and that's what we did. We caught this run, we got this move, we moved in, we moved out, and then the market went a little bit higher, put in a topping phase, and then more or less broke down, and we're trying to get this nice three-wave kind of correction in the market for us to get into potentially a new bottoming formation, and we could see this go higher. So that's what we're looking for going forward, and there could be some good momentum behind natural gas, but we'll see how today shakes out. Yesterday, nice pop. We'll see if it gets completely negated and if it continues to go down to push some new lows like it did over here. Sometimes this is just a short covering rally to suck a lot of players in, and then this bar could end up closing very low on the day, and it could still try and carve out a bottom somewhere over here and eventually build a base using this previous high as the breakout point. Let's take a look over at crude, up 1% this morning. Again, I've talked about crude. I'm not a huge fan of the price action of crude. It looks oversold, but it has got very noisy chart. And if this support level here is broken along these lows, this $50 mark more or less, we could very easily see the 2018 lows get tagged. We could see it drop down into the low 40s or potentially even break the 40 range. So there's a lot of potential downside if this critical level here is broken. And if we were to throw Fibonacci extension, which I haven't done this yet, let's just see where it goes. We'll get an idea of where the downside target is. We go from here down to this low. And you can argue which high to use. This would naturally be the high. This was a news-based spike, and usually I kind of filter those out. You can go with both and create a box, but if we go with this previous high right here, it'll give us our downside momentum of where crude could potentially go if it breaks that level. See, we've got the sell-off, we got the rebound, and then it consolidated through here, and then we've got the 618, which is bouncing off of, and now we could see this 100% measured move, which is $44 per barrel, which brings us back right into this consolidation zone here where we saw the low in 2018. So that's the downside potential if it starts to break down at this point. This is kind of a pretty critical line in the sand, so keep your eyes peeled for that. But overall, it is oversold. It's bouncing off support, and we don't know if it's going to just continue to be range bound or not. If you look at all the moving averages, there's not really any momentum in real direction. They're all kind of crisscrossing and more or less flatlining in this very narrow range. Last but not least, pull up the dollar real quick. The dollar finding some good support yesterday. It sold off and then rallied back. Again, we're still looking for the dollar to continue to move higher. The dollar index, we're looking for around the $100 mark. Not that we're going to do anything there, but we want to see how it's going to react when it hits $100. The US dollar has hit that $100 mark several times going back many years, and it'll act as a very strong resistance area. And if the dollar does hit that level and start to crash or correct in a big way, it's going to spark the commodities to rally and could be the next big leg up in the miners and gold and silver and so forth. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.